What is up, guys, and welcome back to yet another video. Today we're going to be breaking down EMAs, better known as exponential moving averages. We're going to be talking about how these indicators can help you guys notice more trends, notice more reversals, notice some good support and resistance lines, and ultimately get you guys better entries and exits on your trades, forming some good consistent profitability. Now, I think EMAs are one of the more simple yet reliable indicators on the market. I still use EMAs to this day, and we'll talk about how they led to a 587% trade today. So we're going to go ahead and break all of that down. But before I do, make sure you guys do like and subscribe as always. It really does help out the channel as we are growing this strong community that we already have. And then also make sure you guys do get in the description down below and join up on our free Discord. We have over 500 plus profitable members over there. So let's go ahead and jump right into this here where we're on the 5-minute chart on the S&P. The blue EMA here is going to be our 21 EMA, and then the 9 EMA is going to be our yellow. So we are going to break this down in two parts. We're going to first start with the 21 EMA and then flip over to the 9 EMA and talk about how the 9 EMA can really help out the 21 EMA. And then we're really going to pull it all together in the end. Let's go ahead and start talking about the 21 EMA here. I do want to talk about how this can help with some support and resistance as well as some entries. So I do have, 5 white circles drawn out here. And I want you guys to notice how these are respecting the 21 EMA. So you can see we rejected right here off of this EMA and shot down. Then we came back up, we broke this, and then we retested it from the other side, showing some bullish momentum, and then we respected it from the top side and continued higher, showing some really strong bullish momentum to the upside. And I got, my eyes on that. I was starting to see that. And then I ended up taking this trade right here, which ended up going around 130%. I got all of that, made around $450 on that yesterday, and we had premium members make a little bit over a grand. A few of them did. So let's talk about why I got this entry and how you guys can notice these trends. Where I did see that we were coming back and retesting this 21 EMA again. I did only, take a few cons here. I wanted to get some more once we retest this EMA, but I got my starters in only, and then this thing started to pump. So that was the only position that I ended up getting in here. But I did see a few things, let alone this bullish flag coming out, and then we were also in the golden zone of this. So there is a few other catalysts to this. But nonetheless, you can see that we are bouncing off of this 21 EMA and continuing higher, much like we did right here. So I did really like that. And then you can also see the same thing with the 9 EMA. So I stayed in this trade even after dipping down below because it looked like we were holding that 9 EMA pretty well. And then we did end up continuing much higher. And I did get my exit right around this top here at around $610.13. Which was my ultimate target, as you can see in that red line. And then, we ended up still retesting even after I had gotten out of that trade and continuing higher until ultimately breaking down. And then we're going to go ahead and talk about what that breakdown led to and how we are now respecting the 9 EMA. So we're going to flip from the 21, seeing how that was respected, to seeing how you can now respect the 9 EMA. As you can see how much respect this 9 EMA got, following it all the way down here. We only touched it about, 3 times, once here, once down here, and then absolutely dumped down. And then this is where I was looking for my trade because I said, hey, we're going to have to come back, test one of these EMAs soon. If we reject, I'm going to enter a short. So that's exactly what happened. We came up and then we started curling down with this EMA, which was a crazy, crazy bearish sign, which was bullish for me because I wanted that short and I wanted to make some money. And that is exactly what we did. We ended up making 587% or something like that on this trade. We had multiple traders make over $1,500 on this trade. But you can see with my white circles here how well this is respected. We didn't even really break over this. And then once we did break down, I ended up getting my entry here. And then we ended up dumping on that candle actually. And I think my entry was actually, this candle right here. I do want to say it was that candle, and we ended up dumping down. But nonetheless, this absolutely poured. You can see how we started respecting the 9 EMA to the downside and the 21 EMA kind of at the same time. And then we ended up dumping down here quite a bit, only seeing the 9 EMA about 2 or 3 more times, and then finally bottoming out around $599 here. So that was a crazy, crazy trade from around 607 all the way down to 599. Theta ate up these contracts just a little bit, but 587% nonetheless is pretty crazy. I do now want to also talk about something else that we can look at. And that is going to be when these EMAs are crossing. This is kind of the next strategy that you can take where really I'm going to go ahead and clear off my drawings here on SPY. So you can see when the EMAs are crossing, the trend tends to follow that cross. So you can see we cross to the upside right here. I'll draw a circle. This is where we crossed to the upside right here, and then we moved up. You can see over here where we crossed to the downside, we moved down. And then there hasn't been a cross soon, but if we would have crossed the upside here, that would have given me some bullish, momentum to the upside, maybe making me believe that we could have turned around. Maybe that could have happened had those EMAs flipped. But there is a lot of catalysts and reasons behind that. But this is a very simple trading strategy. I know multiple people that just look at these crosses. And when these crosses are violent, that's normally when they are better. Like this one is pretty straight down. As that thing is coming down hard, you can enter on those and then absolutely pour down. Same with the way up. You can grab it once there is a violent cross between the two, and that is normally going to be brought to you by the 9 EMA. The 9 EMA is really going to be the thing crossing, and the 21 EMA is kind of what you want to follow as your regulator. But that is a very good strategy, guys. Obviously, there is fake outs within that. It doesn't always tend to happen, as you can see right here. There was a good pop over. This was a pretty violent switch, and then we ended up dumping down a little bit. But it did end up leading to some more green. So there is a few sides where you do have to pay attention. Of course, pair this with some other indicators. Like for example, on the one that I took yesterday, it was because we were in this golden zone here. We were in this golden zone right here, bouncing. So I really did like that entry, and I did get a good entry on that. We ended up continuing much higher. But there is some other indicators that you can definitely pair with the EMAs. I do think EMAs are one of the better indicators, especially for new traders. And they're very, very easy to use. Guys, you can also even scroll back right here. This is another great example of when the EMAs switch, what that can lead to. Just continuous upside. Now, not always is it that great, but a good idea of how to trade something like this is maybe we would enter a long. Let's say we entered a long right here at this bottom right here at this cross. So what you would kind of want to do is, establish your support and resistance prior. Of course, we don't have time to do that today, but you can see kind of what you would want to do is, ride this up as much as you can. Maybe start to trim once you hit this 9 EMA and start to pull back, and then really start to trim once you hit this 21 EMA. Sometimes what I will do is I will let my runners go, and then I will put the 21 EMA as my stop loss. So that would kind of set it like this. Say we're pulling up on the trend here, and I want to say once we hit this EMA right here, I want to be stopped out, and then I'll just keep drawing it up as the EMAs go, and draw it up with the EMA. That is a really great strategy to stay with your runners and get some profitability out of those. Let those things go, but also keep yourself safe and have a backside plan where even if the thing does start to drop, you don't lose all of your profit. And that is a really good way to kind of just trade the markets and think about trading the markets in general. So the two things I would definitely recommend is looking at the 21 and the 9 EMA, but a few other things that we can do is go ahead and I'm going to switch these to a 50 and a 200 moving average, where we can go ahead and look at, a 4-hour time frame here, and see how well these things are respected once you do draw these out. So we now have the 200 EMA in blue and we have the 50 EMA in yellow. So you can see in a longer time frame, if you're looking at a long-term setup, where you can see you can add some good shares. So I think the 200 EMA is the best to add. If you can get anything under the 200 EMA, that is a great, great sign. So you can see we could have gotten an ad down here. Maybe if you're long SPY, an ad right there would have been really good, and an ad right here would have been really good. And then once you are down below the 50 EMA, there is some more good ads. Something like this. This all right here would have been a great ad right there under the 200 and the 50 moving average at the same time. And then you're also getting that 50 moving average cross. Guys, all of these can change. The times or the EMA length really doesn't matter. It just depends on your time frame. So I would go with smaller EMAs, probably the 9 and 21 if you're day trading. And if you're long-term trading, I would go with the 50 and the 200. But the general rule of thumb is I would start adding to your long-term stocks once you guys dip below the 50 moving average, and then I would really start heavily adding. And if you're thinking about long calls, that's where I would start to get my long calls, is under the 200 moving average. So those are just some really good ideas, and you guys can see how obvious this is, in the way that the market always rebounds. Not saying every stock will, but if you do have a good stock that's tracking the market, something like the S&P here, a lot of the times the market has always recovered. So buying some shares under the 200 moving average will lead to some good long-term profit. For example, you can see, I'm going to zoom out here. This is the last major dip that we had on SPY right here, back in 2022 when we had this whole market downtrend. If you guys would have been scooping up some shares every single day under this 200 moving average, you would have made an absolute bag in this run up, where we did go, let's see, around 200% or something like that from the lows of 2022. So you can say from there, that's around 60% right there on all of your shares, and you had about a year and a half to add. That is a great, great return, guys. And you did definitely lowered your average from the highs here if you got stuck in a trade. That is a great way to move your average down. And then as EMAs start to come back up, then that is when you really start to see that profitability. So I would keep that general rule of thumb of adding under the 50 moving average and then really adding heavy under the 200 moving average. And then kind of just don't really trade too much above those. If you guys are looking for shorts, once you break that 50 moving average, you can kind of short for a little bit. But this is really just going to be a bullish type video where you're saying this is where we're looking for our long setups. Uh, and this is a really good way to look at it, especially when you're zooming out here on a higher time frame. As you can see, every time that we have dipped below these EMAs, we have recovered, and we have recovered for more gain than there was prior. So this is really just a strong way to look at the market. And I think EMAs are good for everybody. I still use them. I don't know anybody who doesn't. Any profitable trader really uses EMAs, or they have some other crazy system. But I do think EMAs are the easiest and most simple, especially if you're a new trader. Keep it as simple as possible. Use your EMAs, use your MACD, use your RSI. Those are easy ways to really start to at least begin understanding the market. Even if those don't lead to, you making 95% accurate trades, I still think that those are putting you in a right direction. And starting to understand things like this will really lead to understanding the way that the market trends are and the way that these swings happen in the long term. So I do think that this is something that every single trader should learn. And if you guys haven't already, I would definitely begin to take a look at this and see how do these impact some of the later trades that I've taken. There's a good back testing tool that you guys can use with this, where you can do exactly what I've done in this video. Maybe zoom out on your favorite stock and look at every time they've been under the 200 moving average or under the 50 moving average and say, hey, if I would have added here, how much percent gain could I have gotten? What did I miss out on just for next time? Don't beat yourself up on it, but I do think it is something to learn and to grow on. And say, hey, for next time, once I see this, I know what this means. I'm not going to get scared by this dip. I'm going to buy this dip. And when this thing recovers, I'm going to see a beautiful profit next to my return. So that is really all I have today, guys. Those 9 and 21 EMAs on the day trading side, and then on the long-term side, the 50 and 200 EMA is really what you guys are going to be looking to use. If you guys have any other questions on any indicators that you guys want me to review, I'm looking to start doing some more of these type videos where I'm going to review the Fibonacci extensions, retracements. I want to do MACD. I want to do RSI. I want to do a few more. So make sure you guys do let me know in the comments down below which indicators you guys want to see me review next. I can definitely get a video out for you guys. So just let me know down there. And then also make sure you guys do like and subscribe as always, and I will see you guys in the next video.